Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Gladstone Investment Corporation quarterly report. Gladstone Investment Corporation is a business development company that specializes in providing various financial services to lower middle market companies. The company's investment focus includes making debt investments ranging from $5 million to $30 million and equity investments between $10 million and $40 million. The company provides senior debt securities such as senior loans, term loans, lines of credit, and senior notes, which are secured by the assets of the borrower. Additionally, it offers junior subordinated debt securities like subordinated notes and mezzanine loans, which carry a higher risk but offer higher returns. Gladstone Investment Corporation also invests in limited liability company interests and warrants or options, allowing it to take an active role in its portfolio companies. The company typically seeks minority equity ownership, but prefers to hold a board seat in its portfolio companies. In some cases, it may take majority stake in its portfolio companies. The fund's investment strategy is focused on mature stage, buyouts, refinancing existing debt, and providing capital to small and mid-sized companies based in the United States. It seeks to invest in manufacturing, consumer products, and business/consumer services sectors, with a preference for companies generating EBITDA between $4 million and $15 million. The company's investment horizon is typically 7 years, after which it exits its investments through sale or recapitalization, initial public offering, or sale to a third party. Gladstone Investment Corporation's gain stock price has experienced a modest increase of 12.28% in the past year, with its market capitalization rising by 12.71%. Several key events have contributed to this appreciation. One significant factor was the company's positive Cone 2025 earnings, which beat analysts' estimates. This news sent a positive signal to investors and helped boost the stock price. Additionally, Gladstone Investment's strategic portfolio investments in various companies, including Smart Chemical Solutions, LLC, Sun State Nursery and Landscaping, LLC, Global Grab Technologies, Inc., and Rowan Energy, Inc., have also contributed to its growth. The company's increase in net asset value, NAV per share, is another important factor. For the third fiscal quarter ended December 31, 2025, Gladstone Investment reported a significant rise in NAV per share, driven by net unrealized appreciation of investments and realized gains on investments. Furthermore, the voluntary redemption of all outstanding 8% notes due 2028 has also positively impacted the company's financials. The improvement in portfolio health is another positive development for Gladstone Investment. The reduction in the number of portfolio companies on non-accrual status during the second fiscal quarter of 2025 indicates a healthier overall portfolio. Finally, the company's consistent dividend declarations have provided investors with a steady income stream, further contributing to its stock price growth. Overall, these positive news events and financial results have collectively contributed to Gladstone Investment Corporation's modest stock price increase in the past year. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline are multifaceted and influenced by various factors. On the growth side, net investment income is a significant contributor to revenue expansion. This is largely due to the company's ability to generate interest and dividends from its investments. Additionally, issuances and originations play a crucial role in driving revenue upwards as they provide new sources of income. Net unrealized appreciation also contributes to revenue growth by increasing the value of the company's assets without requiring any actual sales or transactions. Furthermore, the sale of common stock under the 2024 Common Stock ATM program is another key driver of revenue expansion, providing a steady stream of income through the sale of shares. On the other hand, revenue decline is primarily driven by net realized losses, which occur when investments are sold at a lower value than their original purchase price. Settlements and repayments also contribute to revenue decline, as they reduce the company's assets and income streams. These factors can have a significant impact on the company's financial performance and require careful management to mitigate their effects. The company's operating cash flow has been a subject of inconsistency in its financial reports. However, a closer look at the data reveals a more definitive picture. According to the most recent information available on page 48, the company generated $398.8 million in positive operating cash flow. This indicates that despite previous inconsistencies, the company is currently producing a significant amount of cash from its core operations. The company's debt level and interest expenses have undergone significant changes over the past year. The total debt has risen by 25% from $455,709 to $571,838, indicating a substantial increase in borrowing. This is further reflected in the weighted average balance outstanding under the credit facility, which has increased from $41.9 million to $80.2 million. The interest expenses have also seen a notable rise, with a 48.7% increase from 2024 to 2025, amounting to $3.1 million. The net interest expenses for 2025 stood at $26,227,000, compared to $17,912,000 in 2024. Additionally, the interest payable has increased by $21,000 in 2025, a relatively modest rise compared to the significant increase of $285,000 in 2024. The issuance of new debt instruments, such as the 6.875% 2028 notes and 7.785% 2030 notes, has contributed to the rising debt level. These developments suggest that the company is taking on more debt to finance its operations or investments, leading to increased interest expenses. Overall, these changes indicate a significant shift in the company's financial position, with both debt levels and interest expenses experiencing notable increases. The performance of various segments and regions has been a mixed bag. On the positive side, diversified services, home and office furnishings, housewares, durable consumer products, buildings and real estate, and telecommunications have shown strong results. These sectors have managed to thrive in today's market. In contrast, several key industries have struggled. Aerospace and defense, machinery, oil and gas, leisure, amusement, motion pictures and entertainment, electronics, chemicals, plastics and rubber, healthcare, education and childcare, mining, steel, iron and non-precious metals, and cargo transport have all underperformed. Geographically, the performance has also been uneven. The West region in the United States has been a standout performer, bucking the trend of poor results seen in other parts of the country. However, the South, Midwest, Northeast regions in the United States, as well as Canada, have struggled to keep pace with the rest of the market. Management's outlook and strategy for the company are centered around growth and maintaining a balanced portfolio. The company aims to invest approximately 75% in debt investments and 25% in equity investments, with a focus on lower middle market private businesses that meet certain criteria. To mitigate concentration of credit risk, management seeks to deposit funds with major financial institutions. The company's strategy involves providing significant managerial assistance to portfolio companies, which is reflected in the growth of net assets resulting from operations. In 2022, there was a 115.8% increase in net assets, compared to $47,446 last year. Management also prioritizes transparency and oversight in the valuation process, using a combination of internal and external expertise. Management's goal is to continue qualifying as a real estate investment company, RIC, under Subchapter M of the Code. The company anticipates potential conflicts of interest with Gladstone Investment Corporation and its affiliates, but this does not seem to have impacted their strategy or outlook for growth. Overall, management's focus on growth and balanced portfolio investments suggests a positive outlook for the company's future performance. That concludes the financial summary for Gladstone Investment Corporation. Feel free to comment below, and I will be happy to answer them when possible.